Good morning, Sense of Things audience. It's Jeff and Ron here once again, and we are off and running with another crazy week on the markets, crazy week in the world. Ron, how you doing, bud?
Good. Things are heating up, not just outside, but markets, geopolitical, Europe. I just, you know what? This is, I have an expression for it, which this is a Disney channel, so I can't say it. This is a dream of
Yes.
financial media. You know what I'm thinking. You know where I'm going with that one. But
Yeah.
yeah, no, this is a dream for financial media because they have too much to talk about.
Yeah. It's just a never ending craziness right now. Of course, we have Fed
Not
decision.
even a
Yes.
cycle. We got the earnings cycle, but you got everything else surrounding it.
Yeah. On top of that, the first Fed meeting in the world of, oh, yeah, the Fed's probably going to cut 6 or 7 times this year. No.
How about zero now? Do you know if you look at the Fed futures, it's
Yeah.
now all under 50% for the rest of this year.
Yeah.
Yeah,
The only thing I
all
could,
this was great financial media fodder for the last year and a half.
oh, yeah.
Brutal, brutal. That's why I said best way to watch financial TV is on mute.
Yeah.
Crazy. Best way. Come on. Why would you want to listen? They bring on 10 people a day. What do you think the Fed's going to do? What do
Yeah.
you think? Do you have nothing else to talk about?
It's, well, and it drives me nuts because it's just, you and I have been saying this for almost a year now. There's no way in hell they're going to cut interest rates unless the stagflation argument happens, which I don't really think it's going to. They're not going to do it until rates come, until the inflation gets stopped at least, or starts to come back the other way, or they see a massive slowdown. They're not going to do anything. And the closer it gets to the election, they're certainly not going to do anything. So the odds are maybe 25 basis points in December at best.
After the election.
Yeah.
Look, Powell came out yesterday. Even though inflation's been ticking up, it's unlikely the next move will be higher.
Yeah.
Okay, great. That doesn't mean it's going to happen this year.
Yeah.
And they would never tip their hand. But the idiots in the audience in these pressers always ask a question. So what do you think is going to happen next? Are you gonna drop rates? Why would you ask a question that you know you're not going to get an answer to? Why? And then some other schmuck asks almost a similar question a different way and says, if not next meeting, what about later in the year? We're data dependent. Jesus, you could just record this and just, what are they paying you to show up for to ask these idiotic questions?
It's the same agenda. They just changed the date. That's the funny part. Literally, it's insane. Once again, I'm like, but what makes me laugh is I guarantee you within 2 to 3 days, the narrative is going to be that what he said was that they're going to start cutting rates by the end of this year. No, that's not what he said. He said the exact same thing every single month since last year this time.
Yes.
No change.
Higher for longer. How many times have we said that in our
higher
podcast?
for longer, or data dependent. It's the same stuff. They're not saying anything, but these guys will create something out of the blue, and then they start to follow on. Everybody else follows on. It's a game of telephone by the end. My call, December at best, and I don't even think we'll see one, quite frankly, this year. Odds are, I don't think we'll see one.
Look, we said this since the end of last year.
Yeah.
2 to 3. Now we were talking maybe 1 to 2. Does it really matter if you drop at 25 basis points?
Nothing. Yeah.
Does it really matter? It matters if you go up 25 from here. But does it really matter? A 25 base? Well, what does that mean? The economy's going to crash? All of a sudden, the banks are going to start opening the doors to lending? Again, financial media. Give them a black eye and go away already. This is just ridiculous.
It's funny because we keep talking about commercial real estate, and there was a gentleman on, I think I was listening to Fox Business or something like that, and he was on there and he said, he goes, the reality, and he goes, I'm in commercial real estate. I think he was with CBRE or something like that. We've got the largest commercial portfolio, and they're saying with the renewals and all this, he said for it to have any effect, we're going to have to see almost a 200 basis point move downward for it to not have an effect on commercial real estate. And they shouldn't do that at this point. So what he's saying is basically it's going to be a little bit of a crap show when it comes to the commercial real estate, because all these things are renewing. I was sitting with a guy a couple of weeks ago at a at an event. Basically he does commercial loans for buildings, and it's a mess. Because I'm really not in business right now because I can't do anything, and the banks aren't lending. So
yeah, that's a quick point. I heard an
yeah,
interview on TV, and I know you got some stuff to get into. So this guy has been a veteran of real estate in the New York metro area for 4 or 5 decades.
yeah,
And he's semi-retired now. They never retire. And they were talking about what he thought. And he basically said it's a crap show. He said people were always worried if they got to 8 to 10% occupancy rate.
yeah,
It's greater than 25.
mm-hmm. Yeah.
So for decades, they were worried about 8 to 10. And of course, there's more buildings. There's
Mm-hmm.
more occupancy as far as people to go, because they go, when they level something, they go higher.
Of course.
And he says, yeah, he says the occupancy, I'm sorry, not the occupancy rate, the open occupancy
Yeah.
is over 25%.
Yeah.
And they were always concerned if it ever got to 8 to 10.
Sure.
That should tell you everything right there. I know it's one city, but
Yeah.
it's New York, for crying out
Well,
loud.
I mean, the funny part is that I will get on to something else, but that the same guy from CBRE, they were talking about, well, can we just, convert all these office buildings then to residential? And he's like, it costs a fortune. And you have to now put in individual air conditioning units and all kinds of stuff like that. It takes the efficiency out of these buildings massively, and the cap rates go down like crazy as a result, and the banks aren't willing to loan. So it's okay. People don't want to live in the city. They don't want to work in the city. They want to work from
They don't
the
want to pay the
suburbs.
city wage tax.
Yeah. Yeah. On top of it. Let's kick off a little bit with some interesting facts. I wanted something fun because there's been just a bunch of crap in the news. So
why not have useless facts?
10 useless facts. These are things that when you have a drinking game, when people are asking for useless facts, the first recorded recipe was over 4,000 years ago, and it was a recipe for beer. Once again, proof of what Benjamin Franklin said, that the proof of God's love is the fact that he created beer.
I got to say, I'm not a beer guy. I'm a vodka tequila man. But I got to tell you, I could sleep well tonight knowing that fact. I'm just
knowing this. Here's the good one. The longest English word without a vowel is the word rhythms.
Now that's interesting.
Yes, I did not know that.
I did not know that either.
A group of flamingos is called a flamboyance.
I got to tell you, that makes sense in many ways.
It does. There's a lot of them down in Miami, a lot of flamingos down there. The original Monopoly pieces were inspired by charm bracelets.
I actually did know that. I saw a documentary on Monopoly. It's on Netflix. If you haven't seen it, it's actually very interesting.
Yeah. Homeboy was he's pretty innovative, and nobody really thought that it was going to work, and it worked immensely well. The world's longest word is over 189,000 letters. It's the protein that they call Titan, but I couldn't even fit it all on the screen with 189,000 letters. Here's an interesting one. Honeybees can recognize human faces.
Now, how the hell do they know that?
I don't know. Apparently, they just come up, and if it's an attractive face, if it's a Florida man, they run, all that kind of stuff. The ears of a cricket are located on their front legs. So they're always going, hey, speak up here. Come on.
I did not know that.
This one I thought was the greatest one of the whole group, though. The inventor of the Frisbee was turned into a Frisbee. So when he died, his wishes were that he wanted to be cremated. And then there was a limited edition set of Frisbees that all include his ashes in them.
Hey, thank God I don't have one of those.
Yeah. There are more possible chess games or overall games than there are atoms in the observable universe. So
I don't believe that, but that's
how incredibly complicated the game of chess is. And then the final one is Australia is actually wider than the moon.
A lot of people don't know, because I've been to Australia. Landmass of Australia is actually very similar size, maybe a little bit bigger than the 48 contiguous states of the U.S.
Yep.
But they only have 25 million people living there, or 30 million.
Yeah. Well, because they're on the fringes. Nobody lives in the middle.
You don't want to live in the center there.
Yeah, we watched this one train show on the Smithsonian Channel, and They were, oh, here's this
Jeff, you're
train
watching
that goes
train
from,
shows now.
from like the west coast of Perth all the way across to the east coast. And it's, oh yeah, well, we're stopping in this one spot in the middle and it's a hotel. And I'm like, who the hell goes to that? It's nothing.
Probably the train company owns it. That's the only reason why they stopped
No, it
it.
was a private family, and that's how they get
Oh,
their mail and all their stuff and all this. But I'm like, who in the hell goes out to the middle of
got
nowhere?
their own zip code.
Yeah, it's hilarious. A couple things. A lot of you guys know that I'm a big follower of the Investors Business Daily. One of the things that they've always had is a stock market exposure or stock market exposure chart, I guess, the best way to explain it, or indicator, which they've recently updated. And it was really intriguing because I followed this for years. I used it as part of our cash trigger for our portfolios that I manage. And what used to be, it was basically 80 to, I think it was like maybe 80 to 100%. Then there was a yellow and then there was a red. And now they've loosened that up a little bit to give it a little bit more nuances. And it was intriguing to me because using this for my own portfolios that I manage, if you looked at this at the beginning of April, it was sitting here right in this 60 and 80% stock market exposure. And this started basically around April 15th ish, the Tuesday of that week. It went from here to here in a matter of a day. And this is triggered off of getting the indices going below their 50-day moving average. So it got as bad a few days ago as being to the 0 to 20% range here. And it's now started to recover back a little bit. But so you understand what this means.
It's almost like an overbought, oversold indicator.
Yeah, I mean, it is. It's just their own unique way of doing it. So basically, this big drop here in the S&P 500, the red line here is the 50-day moving average. This is that day that I had made some changes to our portfolios. We started raising cash. It's not going to stop you. It's not going to stop a down decline a little bit, but it does indicate when things go below like that. And so the S&P, we're still hovering between the 50 and the 100-day moving averages. The real big one that's made a bigger move down is the NASDAQ, which kind of needed to because it was ridiculous. And we've been saying that for months. We're still hovering now below the 100-day moving average. But it's amazing to me, all the bad news, all the horrible stuff, all the I think economic data that we're getting, some of the earnings data we're getting. It's amazing to me the resilience of the NASDAQ and the S&P. How about you?
The top 8 stocks are the same.
Yep.
The top 8 stocks have the majority of the weighting in both. They both needed a breather.
Yeah, but still they're pretty damn resilient now. So I guess it's those same stocks. It was interesting how Meta got whacked during earnings, but then when people started to realize, oh, what they said is they're spending a lot of money because they're making a crap ton of money on AI based stuff. Oh, maybe that's not such a bad thing that they're
spending. Then Google propelled it the other direction when they had their earnings.
Yeah, exactly.
Doesn't matter.
From the economic standpoint, interestingly enough, some of the things this week specifically that when I look on briefing.com on their economic calendar, these are some of the things that were high. They're things that are highly affecting the market. ISM index, it's been since December of 22, it's been below 50, which tends to indicate contraction in the manufacturing sector. Recently, it had been moving in the positive direction. But once again, this month we pulled back down below 50%. Even the months that were above were like 50.4 or something like that. So it wasn't anything major, but we're still indicating on the manufacturing side that we're in a contractionary area.
Yeah. Anything under 50% is not good.
Not good.
Or 50. Yeah. I should say 50% to 50.
Yeah. And it's been riding there for quite a while now.
Yeah.
Consumer confidence. I think this is for me is an indicator of, all right, the consumer's now starting to get a little bit worried. And I've got a couple slides after this that kind of confirm this thesis for me. but we've been on a kind of gradual decline. This month really dropped off quite a bit. And it was a bit of a surprise to the market when consumer confidence went down. The total was here in the middle. The expectations are much, much worse.
Again, the expectations is the mentality.
Yeah.
The mentality has just been on a steady decline since COVID, so it doesn't matter.
Yeah. And here's the interesting part of it. 3 stocks that I think are bellwether. There are bellwether stocks, but also are an indication of the consumer and where they're willing to cut. Starbucks second quarter earnings were absolutely atrocious. The stock got poleaxed down. You had revenue down, net income down, profit margins are down. Pretty much everything across the board was just bad for Starbucks at this point. Another one.
Real quick on Starbucks, the CEO was on CNBC yesterday and got totally roasted by all of his typical CEO political rhetoric about where the company is and where they're benefiting, and he got completely roasted and the stock got decimated yesterday.
Yeah. Again,
deserved, by the way.
Yeah. Once again, it's okay, but I think it's also it's coming to that point where it's okay. People are stretched thin. Inflation's continuing to go up. Where do you start to cut back? You start to cut back on that $5 coffee that you're going to have.
Closer to cents or more. Insane.
Yum Brands, another one. You think, maybe the big heavy.
But why don't you tell the audience what Yum Brands makes up?
Yeah, so you have Kentucky Fried Chicken, Taco Bell, A&W Root Beer. I think Long John Silver's in there too. Of course, their big one is really Kentucky Fried Chicken because it's worldwide brand. Another one, revenue's down. Their net income was up. That can be monkeyed around with, but with tax stuff. Profit margins were up, which is good because they had lower expenses. But I think the revenue number for them was a big one. Another one that just got poleaxed the other day. And I think the final one, which this one is interesting to me because they're a big brick and mortar, but they also have a huge online pharmacy and they just got crushed. CVS Health, revenue down 4%, net income down 48% from the year before. Margins are down, which they don't have a whole lot of margin to begin with. And just everything pretty much down at this point. So to me, it's saying that, all right, we're starting to see some major cracks. We've seen cracks, but we're starting to see some major cracks in, I think, the low to mid layer of the economy. Those people that are in the lower end and the mid layer, plus I think in CVS's case too, another big part of it was the loss.
Well, not only that, but it wasn't just the earnings that this thing fell off a cliff. If you look back at the chart, this thing started to have a precipitous decline about a month ago, which means somebody knew something.
Yeah. And I think the other part too, that I listened on the conference call on this one because I've had my eye on it for a while. Their loss that they're having in some of these markets from theft is just off the charts horrible. I know some of these markets, I was in Boston a few months ago. You go into a CVS and literally the toothbrushes are locked up. So you literally have to go in. It's like going to a museum. You have to have somebody come and open up every piece of it just so that you can get a toothbrush or
going back to where retail was 60, 70 years ago.
Yeah.
Because that's what they used to do. Everything was behind the counter.
Maybe more effective to do that. It's just, you have to go to the counter and get everything from them directly from the counter. But it's interesting to see some of these companies as we roll into earnings season. Of course, a lot of the tech companies are doing extremely well, but those companies that are really supported by the consumer, I think are starting to show some signs of, okay, now it's hitting the bottom line for a lot of these.
Yep. No, you hit 3 good ones there. No doubt about it.
Yeah. That is my piece of the show for the day. Folks, we're here to do this for you. We're trying to keep these as tight and as short as we can so that you can consume them and get on to your day. But I think although the stock market is indicating, hey, we're out of this, whatever we were going through over the month of April, it's interesting to see. And I think we have to watch very carefully with earnings season, what's going on here.
Yeah, I agree. I agree. You know what? Never a dull moment. Well,
Lots of
every episode's going to have something new. That's for sure.
lots of information to give out. Thank y'all for joining us. Make sure that you share this with somebody. Make sure that you hit that upvote and make sure you're subscribed to the channel so that you don't miss any of these as they come out. Because Ron and I are starting to do a few more of them because there's just so much information. We just can't do it all in one show. So thanks a lot, and we'll see you guys here back the next time.